As a federating unit, tax administration in Nigeria is multi-tiered. That's with the Federal Inland Revenue Service, FIRS, superintending over the tax regime at the federal level. The critical role of the FIRS is born out of the nexus between tax revenue and economic growth. Economic experts say there is a twin connection between revenue generation for economic development and effective tax administration. Therefore, a central objective of any tax system is to be able to strike a fair and equitable balance between maximum revenue generation for sustainable development and, of course, encouraging productivity. Now, developed world economies have an extensive and effective tax administration system, which is a major source for their own expendable revenue on infrastructure development. Now, regardless of appellation as Africa's largest economy, Nigeria's tax to GDP ratio is said to be one of the lowest in Africa, accounting for a mere 6%. Now, the Organization for Economic Cooperation, OECD, in 2019 report, for instance, shows that there was a slight increase of 0.4 percentage basis point between 2016 and 2017. That's from 5.3 to 5.7%. Now, Nigeria's tax system has been undergoing reforms over the years. Government has come up with several initiatives to broaden the national tax base and, of course, raise tax net to between 10 and 15% to the GDP, away from the 6 or thereabout percent, which is at the moment. The talk now is about the Finance Act, which unbundles 7 extant fiscal laws to address gaps in our tax administration and, of course, raise it up in line with global best practices. The Finance Act is described as a new dawn for the Nigerian economy. But the crux of the matter is, what does this finance law hold for me and you? Will we now pay less tax or more? How will this law impact on individual or corporate entities? What does it mean for investors domiciled physically in the country or those that are deemed to have significant economic presence in our country? Will this Finance Act address pervasive tax evasion? This will be our focus or our concern this week on Late Edition. I am Claire Adelabu Abdulrasak. Thank you for joining me. Dr. Ashek Maidogo is a PhD holder in economic development from the Usmanu Danfodio University, Sokoto, and an MSc in money, trade, and finance from the University of Maiduguri, where he served as lecturer between 1994 and 2007. Dr. Maidogo was a member of the interim management team in 2019 and is a serving director and special assistant on special duties to the Executive Chairman, Federal Inland Revenue Service, FIRS. He has also served in the capacity of a director FIRS between 2010 and 2019. Team leader, Statistical Unit Debt Management Office, DMO, between 2007 and 2010. Dr. Maidogo was special advisor to the Minister of State for Finance, and that's between 2011 and 2014. He is a member of many professional finance bodies, including National Institute for Policy and Strategic Studies, KURU-JOS, Associate Member, Chartered Institute of Taxation of Nigeria, CITN, and Nigeria Economic Society, NES. He's widely traveled and has acquired a wealth of experience in finance and economic-related matters, especially from prestigious international institutions such as Harvard University in the USA. Dr. Maidogo has also authored many books and academic papers on economic development, poverty alleviation, and gender and economics of poverty. My second guest is Dr. Dick Iri. He's a PhD student at the Department of Accounting, Nasarawa State University, Kefi, in North Central Nigeria. He holds a Master of Science degree in Public Sector Accounting at the same university. Dr. Iri is Head Technical Department, Domestic Taxes Group, Office of the Coordinating Director, Domestic Taxes Group. He was Regional VAT Coordinator, North Central Region in Kaduna between 2016 and 2017. He was also Regional Coordinator, Northwest Katsina between 2014 and 2016. He served as Deputy Director, Tax, Individuals and Enterprises Income Tax Department, headquarters function between 2013 and 2014, and was a tax controller, medium tax office, MTO in Abuja between 2011 and 2013. He was also a tax controller and assistant director, tax in Benue State. So my two guests this week, quite capable to, of course, discuss the issues at hand. So let me quickly welcome gentlemen to late edition this week. Thank you for joining me on the program.
Thank you very much.
Let's begin with the fundamental understanding of what the role and responsibilities of the FIRS is within the context of tax administration. Are you basically a revenue collector, a revenue generator, or both? Let me start with Dr. Medigo.
Well, thank you. Taxation is usually anchored on law, and the Federal Inland Revenue Establishment Act have clearly specified the mandate of the service. Based on the Act, FIRS is mandated to assess, collect, and account for taxes that accrues to the Federation. And for this purpose, basically the taxes that we collect includes, as we are aware, the company's income tax, the value-added tax, the petroleum profit tax, the stamp duties, the capital gains tax, and the technology development levy. So our mandate is to collect these taxes, and this forms the basis for, as a federating unit, it serves as the basis for revenues that are generated to be shared by the three tiers of government. So what we do is to collect and then fund government to execute its developmental projects. And it is expected that as dividend of democracy, these resources will be fully utilized for the benefit of Nigerians at the three tiers of government.
So basically, Dr. Inri, the role of FIRS is not to generate, but it could be generating in a different sense, in an indirect way, because when you assess and you collect, it's a way of, generating revenue for government, in a way, isn't it?
Yeah.
Maybe you want to add some more.
I want to add to what he has said. The broader function that FIRS perform can be said to be administration of taxation. And administration in the sense that collection is just a subset of what FIRS does. Because in the process, in administration, they set out a guideline, they guide the public, they educate them, and also set out the rules and regulations that need to be followed in the performance of their basic civic responsibility. So it goes beyond just tax collection. And in doing that, we also, in administering all the laws that have been enacted by National Assembly, we ensure that the businesses of, taxpayers' businesses are helped in one way or the other to grow from one stage to the other, from maybe like small until they grow to become large. So these are all part of the function that FIRS does to help the economy and to see that...
So in any of the reforms,
yes,
in any of the tax reforms, the FIRS is critically in it, embedded in it.
Of course.
And basically you also help to enlighten, the public on the modalities and what it entails. So you are into the Finance Act. You are part and parcel of the Finance Act.
Yes.
Okay, let's look at the tax environment in Nigeria, because according to the OECD, that's the international organization, of course, that looks at the economic development of countries. The 2019 report about 26 African countries shows that, okay, it says that it is not the tax revenue for Nigeria. It's not really reflective of the huge, economic activity that go on in our country.
Yeah.
And it says that the percentage basis points of tax to GDP ratio of some African countries, it's 11.5% higher than Nigeria. Why is that so?
Well, one of the challenge has been we have a very huge informal sector in this country. And taxation of the informal sector has been a challenge not only in Nigeria but in the whole of Africa. And because of that, we have a situation where Nigeria being the largest economy in Africa, but unfortunately the contribution of taxes to GDP is, as you've mentioned earlier, is very slow, is very low compared to our peers. We have the lowest.
What is it basically? I mentioned 6%.
Yeah, it's basically it's only 6%. Yeah, it's 6%. But so this is actually accounted for a number of factors. One of the factor is, like I said, the huge informal sector have contributed. And then secondly, there is also the issue of having the right tax culture. In some countries, tax is a civil obligation. And in some countries, because of the level of awareness of the need to contribute to growth and development, people exercise this civic responsibility voluntarily.
Even when they are not captured?
Even when they are not captured. Over the years, as part of the reform, there were a lot of initiatives that have been put in place by the Revenue Administration to encourage voluntary compliance. I believe that a lot needs to be done, and the FIRS of recent is coming up with more initiatives.
Okay, so you speak of two main factors.
Yes.
The huge informal sector,
yes.
which is not captured within the tax net. And you also talked about culture, the tax culture of Nigerians. But I want to ask, and I'm taking my question to Dr. Inri. In 2017, the World Bank Index report on ease of paying taxes rated Nigeria 180 out of 192. Which do you think is a bigger problem for us? Is it the corruption or negative tax culture?
Let me start by saying that one of the major challenges that we have is the dearth of data. Because even the 6% tax ratio to GDP, I'm sure the data at the other tiers of government may not have been properly captured. FRS at the federal level, we can say because of our fatherly role, so to say, and our level of development, we have some level of some information that it can rely on.
So you think
at the state, yeah, it could be higher than 6. It could be higher than 6 because at the state and local government level, the taxes that are collected or paid at that level, I'm not sure we have adequate record on them combined with the federal level to enable us calculate the actual GDP. But be that as it may, that is the position that we have officially in the public domain. And in saying this, I want to say that it's not as if the major challenge is corruption, so to say. But the issue of attitude, which Dr. Sheikh Medugu just mentioned, is something that we need to talk about. Because in Nigeria, the tax system have introduced self-assessment. That is, by self-assessment, they assume that every citizen will honestly declare his or her income, come forward and pay the tax that is due. But there are so many reasons why the citizens are not complying with this self-assessment. One could be their perception that maybe the hen and the egg, which one comes first? The government should do first before I pay my, fulfill my responsibility or not. So these are some of the factors that could be responsible for this, the low rating that they've given to, now not necessarily the corruption, so to say, because with the introduction of autonomy, the attitude of staff towards and also the automation, most of this payment goes straight to the banks. It's not as if anybody collect cash and go and remit to the treasury. It goes straight, taxpayer pay direct to bank, and it goes to Central Bank of Nigeria. So the attitude of people coming up honestly to declare is what I think we can address as a revenue agency more by way of education and enlightenment.
You know, when we talk about attitude and tax payment or tax evasion by Nigerians, and we do a comparative analysis between what happens in other crimes, it compels me to look back and remember the quote of Franklin D. Roosevelt. You know, he says, "Taxes are the dues that are paid as members of an organized, civilized society." So if Nigerians do not or have not imbibed the culture of, the right tax culture, do you blame them, Dr. Medugu?
Well, the issue here is that, just like my colleague has said, in other jurisdiction or in some jurisdiction, particularly the advanced economies, the citizenry see what is being done with their resources, which they pay in the form of taxes. And that is why he mentioned whether the hen or
which comes first.
Which comes first. But as a civil obligation, it is expected that you pay, and then as government utilize these resources effectively, it actually encourages compliance. We have seen in this country, in some states, where tax resources are judiciously utilized, and then the level of compliance have improved as drastically. I don't want to mention states, but compliance is an issue in most countries, but education, sensitization on the part of the tax administration will play a key role in improving compliance.
What category of taxable people in Nigeria are most guilty?
I think the informal sector are the most guilty.
But they are
the
not
low
captured.
income.
But the informal sector is not captured.
To some extent, we have record of some of them, not completely, but they are the ones that are more into the invasive in tax compliance. The organized sector use what I call legal framework to organize their tax affairs, in the sense that they look at the law and look at the loopholes and what the law has given them to play with, the gray area, and play with and organize their tax affairs. But
so this could be termed as
yes,
technical
yes,
evasion.
Yes,
You know, they
exactly.
exploit the gaps in the law.
The law, yes, technical, so to say. But the lower realm are the ones that do not even see any reason why they should even pay any tax at all. One, in the first place, they don't even keep records. So what are they going to declare? You know, so they just look up, look down, and say, okay, this is what I want to pay. But to an extent, if they are captured, they can now grow from that point to a level where, through education enlightenment, they can now have a bit of structured record keeping, and they can now give a more of honest reporting of their operations. Yes.
But gentlemen, did you think honestly that if the informal sector, the SMEs and the MSMEs, that are not captured, that are not obligated to, remit taxes, do you honestly think that they will come forward and say, look, this is how much I earn and this is, my tax? That's one. And two, I'd also like you to give us an insight into some of those technical gaps in our laws, that these bigger organized sector exploit, to evade tax? Again, let me come back to Dr. Medogo.
These are some of the issues which I believe the Finance Act has tried to close. One of the issues is that our tax laws over the years have been, so there has been the need to update the tax laws in order to be in line with best practices. For example, the taxation of the digital economy. It is the Finance Act that has now provided the basis, the avenue, where some of these loopholes that have been, that were being exploited before, is now being addressed through the finance.
How? Let's take digital economy for instance. How did it present, as a gap, for exploitation of our taxes?
Well, our law, as it were, the emphasis was on fees based. Okay. Fees based in the sense that you have to have a physical presence or through an agent on which you transact your business.
We must be able to identify your location by way of address.
Yes, address of someone through whom you organize your business in Nigeria. But with the finance bill now, it has gone beyond that by introducing that significant economic presence. Okay. We share
sorry, I don't want you to take me for. I want to understand this. How. So those that are exploiting the gaps don't set up here.
Yes, of course.
They don't set up here.
Yeah, for the non-resident,
yes,
most of them don't set up here. And when they transact business through some other agent, they will claim that they were not here. They are not subject to your Nigerian tax.
Oh, okay.
That's one. But addressing the question you raised, what are some of the gaps that the disorganized sectors exploit? There are so many. Some of them are through connected party transaction, related party transactions, by forming a group and I do business with you, do with you, over invoicing from one to the other. And as long as you provide the evidence that invoice was, a transaction took place, you are bound to take it. So that way they build up their costs and reduce the profit that they can tax. Some of them also play with capital allowance claim. That's the allowance given for using your assets, for example. And that is another area that they exploit. There's something that's called thin capitalization, that is debt equity ratio. Instead of using equity, they use more of debt. And in that case, because interest paid on debt is a liable, deductible cost against your profit. So there are so many schemes that they devise to reduce their profit that is taxable in Nigeria.
So and that of course cost us, cost the FIRS a lot in terms of tax remittances.
Yes.
Okay, let's look at initiatives over the years that the federal government at that level had come up with, of course, to reform the tax system, the tax administration system. I know in 2017, it was all over the place. FIRS was all over, the media, both traditional and new media, talking about it. VADE. That was one initiative that was put in place to encourage voluntary, tax payment.
Yeah.
It was for a period, some months. After that, what had happened?
VADE was actually a scheme that was meant to encourage voluntary declaration by taxpayers who have hitherto been either under declaring or non-declaring, not declaring at all. So it was a window for them to come into the tax net and then update their records so that they will now be given a clean bill of health. So it was an exercise that was open, very transparent for taxpayers to come on board and then declare and then sit down with the tax administration and then agree on a payment plan. And as part of the scheme, once they voluntarily declare and accurately provide the information required, so they will not be prosecuted for the earlier infractions. And as a result of the scheme, taxpayers came up and then they were, they declared, and then some paid, and then some actually came up with the repayment plans. And it was an exercise that brought in about 98 billion naira, if I'm not mistaken. It was around that figure. And it was not only here in Nigeria. Other countries also provide such a window from time to time, because it is also an avenue of bringing in more potential taxpayers into the tax net. Because once they come in, they declare and make payment, going forward, the tax administration will now follow up on them as at when due, so that they pay their fair share of taxes as expected.
All right, Dr. Medugu, thank you. Dr. Iri, I'll bring you in just after the very short break that we're about to take, so that you also tell me, after that window, what happened in terms of compliance. We'll be right back to take your response to that.
Thank you.
This is Late Edition, and this week we're looking at the Finance Act specifically and tax administration, of course, how it involves the FIRS. We'll be right back. Welcome back. You're watching Late Edition, and Dr. Medugu, thank you very much for your response. Let me bring in now Dr. Inri. I asked a question. After the window period for VADs, what happened in terms of compliance with tax payment?
One of the things that VAD achieved is bringing in those that were hitherto not in the tax net. That's one. And two, the additional revenue that came in by that voluntary declaration, which VAD window gave us, my colleague doctor have just mentioned. After VAD, we discovered that because this is a voluntary declaration that you have made, and those who were owing, the service took a step to see if they can take some compliance steps in terms of recovering the amounts that they have declared. Some took undertaking that they will pay within some period of time. And when they defaulted and all effort, we had to embark on this lien that came up briefly. Though that is being reviewed now, that process is being reviewed to make it more objective. So that it's not the VAD itself didn't bring everybody that you expected to come in. So, and just as we alluded earlier, the low-REM taxpayers are still a challenge. And I think that is what the Finance Act have come to address by saying what is even the benefit, the cost-benefit analysis of chasing this all these small taxpayers who are not even visible and are not even, you can't even locate. So to me, the Finance Act have come to address that. But it's okay. These ones, why not concentrate your energy and effort on these organized taxpayers, the medium and the large taxpayers? So that going forward, this is what the focus of the service is going to be on. Yes.
Okay, you talked about objective,
Yes.
which now brings me to my next question. And because when you speak with a lot of, many Nigerians about tax payment and why some of them don't even bother to pay tax, they give you a whole lot of reasons. One, because maybe the cumbersome nature, all the paperwork and all that. What exactly, if you look at all the national tax policies, both the one from 2012 and the one reviewed in 2017 and all the initiatives, what are the basic guiding principles, that the FIRS put in place to make it easy for people to pay their taxes?
If I might come in, tax payment process, there's no doubt is cumbersome. And studies have shown that any effort geared towards making the processes that taxpayers follow in paying taxes will have a significant effect in revenue generation. A study, for example, in Georgia have shown that the effort by the tax administration to simplify the payment process have resulted in a 20% increase in revenue. For the FIRS, as part of the reform process, we have automated the payment process in the sense that a taxpayer, from the comfort of his or her office, can file returns and make payment. And we have also put in place various initiatives to auto-deduct as source. For example, when you travel, you buy a ticket, airline ticket. The VAT component via the introduced automation process is expected to be, swapped automatically to FIRS account without necessarily domiciling it in, So we are modifying our forms, reducing the quantum of the form to make it more taxpayer friendly. And then we are also improving our automation process so that our taxpayers will find it very easy to pay tax. As you know,
so you don't have to go to your physical offices to obtain the forms, and then you fill and then you return, which was the practice.
Which was the practice.
Which has, it's still the practice. Some people, we still see people do that. We still see queues in the offices.
For now, the taxpayer, just as he said, can actually do his tax filing and payment at his own convenient time and place. Those who are still coming to the office perhaps still need to be educated and more enlightened. We need to do more enlightenment concerning that. The ITAS, the sectors that we have deployed, allow the taxpayer to do his filing online and also make payment online. These are processes that we have put in place.
Clearance.
Yes, you get your clearance online. Yes. And even the ministries and agencies that are award contract can verify or confirm those tax clearance online too. These are processes that we have put in place and which we are still trying to improve upon and to get better.
Sorry, this just came into my subconscious. What is the principle of withholding tax?
Withholding tax is just
when in a contract form, you are charged, or the withholding tax is taken.
Yeah.
What is the wisdom in that?
The withholding tax came in 1985 as part of the reform in the Nigerian tax system. And the main purpose is just a collection mechanism. Collection mechanism that there were so many taxpayers that were not in the tax net. And these ones were not even visible anywhere. And they had business with government agencies. So government thought it wise that why not let's collect this, withhold the tax that is due from this contract from them. Even if we don't see them, they have contributed something to the basket, the common basket.
And it's meant to be refunded?
Yes, just an advance payment of your income tax, which you will use.
How do companies get back their withholding tax?
Now, if you pay withholding tax, if the withholding tax is deducted from you, the agency remits to government with a schedule showing all the beneficiary that suffer those withholding tax. They are given what is called withholding tax credit note, which you can print automatically online too. Now, when you now file your returns, you bring those payments, those advance payments that you have made through which were withheld, that you have already paid part of your tax liability, and it's offset from your liability. And if there's anything to be paid, you pay that. And if you even resort to refund, you can file for refund and you'll be paid.
Oh, that's wonderful.
Yes.
So let's delve into the Finance Act, which is the latest talk about tax reforms and reforms in our tax administration system. So it seeks to unbundle or reform several existing laws. Can you take us through some of those laws?
The Finance Act is a novel idea, which is first of its kind for about 2 decades. So it was an opportunity. Like I said, we've been talking about our tax laws being out of sync with operational realities. And so the Finance Act was an opportunity to amend the acts. Specifically, I think it has amended 7 of the tax laws. The company's income tax, petroleum profit tax, value-added tax, capital gains tax, customs and excise. And it basically seeks to amend them with a view of generating revenue to defray government expenditure. Financing of our budgets over the years has been a challenge, and so one of the aims of the Finance Act is to generate additional revenue to finance government expenditure. Similarly, it seeks to stimulate growth and development by coming up with provisions that will incentivize the activities of the small, medium, and micro enterprises.
Thank you. Incentivize. Let's look at those incentives and amendments, in the new law, Dr. Ise.
There are so many, and I want to congratulate Nigerians for this Finance Act. This is the best deal that they can ever have, in the sense that one, the small tax, the Finance Act has introduced what is called small taxpayers. That's taxpayers within the threshold of 0 to 25 million. And these ones have been exempted from tax payment, as it were. And also,
so let's get it.
Yes.
Those from 0 to 25 million,
yes, turnover,
have been exempted.
Yes, have been exempted from company income tax payment. So it's as it were.
So what does it mean?
It means
in simple terms, for the layman, what does it mean? It
means that until they cross the mark of 25 million turnover, they are not supposed to pay tax. That's what it means.
If you have a shop,
yes,
if you have an outfit, you have some people within your employ, but your turnover, your profit margin,
turnover,
turnover,
yes,
is not above 25 million.
Yes.
You are exempted from company income tax.
Yes, and also in value-added tax, you are not expected to charge or file value-added tax.
Okay.
Because you are supposed to act as agent of collection. And everybody pay VAT in the first place. Let me educate Nigeria on this. Everybody is expected to pay VAT. Once you consume a vatable item, you pay the VAT that is due on that item. If you consume an exempted item, then you are not supposed to pay VAT on it. But these small companies that the financiers have categorized are not expected to charge or even make return on their VAT. They are no more playing the role of collecting agent as it relates to value-added tax.
Can you give us an example of some of these outfits we're talking about, just so that we can relate with them?
Well, if I can give an example, let's say a small eatery or a
buka.
A buka, yeah. Or a small manufacturing outfit that employs, let's say, two. They produce pure water, and the import of the act is that let's give them room for growth, rather than taxing them. Let's leave the burden of taxes on them. Let them employ, let them grow, because we want revenue. But these companies must grow so as to pay taxes. We should not kill the goose that lays the golden egg. Allow them, give them opportunity to grow, expand, employ people, as much as possible. By the time they cross the turnover of 25 million, they will contribute to the...
How do you know when they cross over? That's the question. Yeah. But if you exempt this category of businesses, my concern, and I'm sure that it's also the question that a lot of people are asking, do we have a database of all of them? And what will be the financial implication of the exemption in terms of revenue generation?
Okay, let me put this way. The Finance Act also in one leg also require that every person in Nigeria is expected to have a tax identification number before you can even operate any bank transaction. Or if you had a banking transaction, you are expected to provide it after 3 months, you'll be able to operate an existing bank transaction. So automatically that has brought them into the purview of the revenue to monitor. That's one leg. Then two, the contribution from these small taxpayers in analytical basis, they contribute less than 10–15% of the revenue that we are talking about. The large taxpayers are the ones that actually contribute about over 85% of our revenue. So if government is losing anything at all, it's not, government is also a social, has to also perform some social welfare to the citizenry to encourage them so that they can also live. And what the focus of this is to ensure that, just as my colleague said, to ensure that these ones also have resources to develop and grow to the level that they can pay tax conveniently without a struggle or being run or being feeling that they are being chased after.
So does the display of tin, before any bank transaction, does it take care of evasion, for instance, tax exemption? I mean, tax evasion.
For you to get in, you are registered in the revenue with the revenue authority, so they have your record. Okay. So we put an eye on them. And as we speak, we have even devised a means of segregating those that have turnover below 25 million based on the record that we have with us in our offices. So we monitor them. And with that, they are expected to also regularly interface with the revenue in the sense that when they have anything to do with government, they may require tax clearance certificate. And they will need to come forth, we need this, so I know we pursue a contract with the government. And that way, you'll be able to know as they are growing their revenue, their turnover, so to say. And so we will now bring them into the tax
that's a way of monitoring. Yeah. When they cross over to
the... Yes. And moreover, the FRA Establishment Act empowers us to work with the banks. They are mandated to provide financial information about the taxpayer. So on a regular basis, our teams can view transactions of these taxpayers, and then once they cross the 25 million threshold, then they will now be expected to file and then pay the right taxes.
Will FIRS write to them in a way that, look, you have reached the 25 million naira taxable benchmark, So you are expected to do this, or you expect them to do it voluntarily?
Yes, two ways, so to speak. Yeah, they are supposed to come and do voluntarily. And also, by the time we get third-party information, we write them and inform them that by the information at our disposal, you have already crossed the threshold. But let me go back to the incentivization of the economy. There are so many incentives that the finance bill actually introduced. Like, for example, the capital market introduced the regulated security lending incentive to those who want to trade in maybe shares, bond, or dividend, and dividend that they receive. Or when they use those instruments to borrow money, the compensating payment to the original owner is not subject to it's franked.
Okay.
The tax they pay, tax they pay is franked. Then they also introduce this real estate investment scheme to ensure that the real sector also grows, the housing sector also grows. This is like unit scheme that have been introduced. The people in the capital market, they can introduce, you can buy units there. This one can buy. Then people can now develop the low-cost houses that people will live in. So that's some of the incentives. There's so many incentives, so many, like double taxation that was happening with dividend have been removed. Interim dividend being taxed have been removed. So many incentives that the finance has actually introduced to
okay. We have to look at VAT, because that is where a lot of Nigerians are concerned.
Yeah.
Because the VAT has been increased from 7.5%, 5 to 7.5%. What are the other taxable areas that government is relying on under this new tax regime?
To generate revenue?
Yes, VATed products.
Well, VAT is is an indirect tax, and the best practice the all over is to move from direct to indirect taxation. And in Nigeria, when you look at the VAT rate in the whole of Africa, sub-Saharan Africa, we have the lowest VAT rate, hitherto, which is 5%, but now increased to 7.5%. And the issues here is that the increase in VAT, even though there's an increase, there are also palliative measures that have been put in place. For the first time, there's an expansion in the exempt list. And then...
that's what I'm saying.
Yes.
We want to know, within this exempt list, which goods, which products are within the VAT exempt list, and which ones are within the VATable list?
What the Finance Act actually did was to clarify what was a bit ambiguous. The VAT Act said basic food items, and there had been a problem in interpretation what basic food item actually means. So the extent that even then people said that once you add value, it has moved from basic, and it should be VATable. So for example, pure water, they say, oh, pure water, you have added value. Bottled water, you have added value. But now the Finance Act have come to clarify all these ambiguities, that pure water, bottled water, they are now exempt. So item that raw cereal, they name them, they are now exempt. That's what has done. It just came to clarify. So the public
can actually get hold of this list of exemptions?
Of course, they are.
Is it there in the public domain?
It's there in the public domain. The Finance Act is there. And which FRA is going to publicize, going to come out.
How many people have access to the Finance Act?
FRA is coming out with circulars to explain, listing out all the exempt items for the public to know.
Okay.
To be well guided.
Okay.
Yes.
Another ambiguity which I also found is the clause, I don't know if I'm right, where they say those you mentioned it earlier on, those who do not have physical structure digital economy, but who have significant economic presence. Yes. I'm wondering, what is the measure of that?
The significant economic presence, let me put it this way in a layman way so that people can understand. You are doing business online, for example, you buy things online, and the the seller or the provider of what you are buying is based abroad, but you are consuming the item in Nigeria. So we can say the online platform has significant presence in Nigeria as long as we can account for what is being bought in Nigeria, what is applying for is being used in Nigeria. But be that as it may, the Finance Act actually spelled that the Minister of Finance will specify what significant economic presence means. And so we are expecting regulation to that effect to clarify this to everybody, that people will understand what it simply means.
Okay, if for instance, I go to a shop and I buy a VAT product, which I intend to also, resell, adding value and reselling, how do I know what amount to remit to, to FIRS?
FIRS.
Yes. Because you have two
input output.
Yes.
Input, yes. There's what we call what you sell is output VAT in Nigerian VAT system. It's called output VAT. And what you bought becomes input, that the cost to you, the VAT you paid on that cost, it becomes input. What you do is to net off the input from the output. The net is what you remit to the tax authority. That is how VAT operates. And the ultimate burden or bearer of the tax is the one that consumed the item. You are just an agent of collection, so to say. Yes, sir.
So just before we round off, because I'm told we have just a few seconds to go. Okay. Income tax, that's companies' income tax. We also hear there's been an amendment. You alluded to it earlier on. Dr. Medugu, what is this amendment in the income tax that, of course, will benefit companies?
Well, there is based on the Finance Act, we'll be having a progressive tax which is now going to be as amended in the company's income tax. Companies whose turnover is between 25 and 100 will pay 20%.
As against what?
As against 30%. So hitherto is 30%, but it's now graduated as a result of the provision of the Finance Act.
With all these incentives, one wonder, are we still sure of meeting, growing our tax to GDP ratio?
Yes, we are, because compliance will be a bit easier now.
Okay.
Easier now. When you comply, the money comes in without sweat. So the cost of collection is reduced. Then not only there are so many incentives, like for example, the minimum tax that makes everybody to contribute to the general purse, that you have a stake in the general revenue pot, has been changed from taxing capital to only the operational income. That's 0.5% of your gross income, which is straightforward and easy. Before hitherto, the interim dividend was subject to tax, but now that has been removed. There are so many.
And I think with the Act now, the tax administration will be low.
Yes.
In the sense that, based on the Pareto principle, we know that it's the big taxpayers that contribute about 75 to 80% of our taxes. So the tax administration will now concentrate, focus on these big taxpayers, provide a very conducive tax regime for them, meet their expectation, service them very well, so that they can now contribute fully to the growth and development of the country.
So on a final basis, so those people who do business online, who promote their activities online, are also now subject to tax payment.
Yes.
That is correct.
Yes. And also there's incentive for agriculture. About 8 years holiday, broken into two, first 5 years and additional 3 years.
If you're into farming.
Agriculture, yes. These are incentive, holiday they have given them.
All right, Dr. Dick Eri, Head Technical Department, Domestic Taxes Group, FIRS, and of course, Dr. Ashik Maidugu, Director and Special Assistant on Special Duties. to the Executive Chairman of the FIRS. Gentlemen, thank you very much for joining me on the edition this week.
Thank you very much for having us, Claire.
And thank you for watching. Do join us again same time next week. From me and the production crew, it's bye-bye.